Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: gold is soaring on US missteps, and oil is falling as demand falters while supply is rising fast. Overnight, US data was mixed. August pending home sales came in a little better than expected, up 4% from July, but only up 3.8% from year-ago levels, which themselves were relatively stunted. Less than 20% of American realtors expect the next 3 months to improve. But the Dallas Fed factory survey reported a sharpish turn lower, a second consecutive monthly contraction in manufacturing activity there, and the steepest since June. But they still have growth, but just far less. New order levels dipped again, costs continue to rise faster than selling prices. And the chances of a US federal government shutdown are rising, with compromise no longer in anyone's vocabulary. Trump thinks no one will blame him for his intransigence. And apparently the next US tariff target is movie production, something both Australian and New Zealand creative industries will look at with a trepidation. And Singapore reported their producer prices, and they rose. They rose 1.1% in August from a year ago, after a 2.4% drop in the previous month. And this was their first producer price inflation since March 2025. Later today, China will release its August PMI data, the key releases before their Golden Week holiday break that starts tomorrow. In India, industrial production rose 4% in August from a year ago, slowing slightly from the upwardly revised 4.3% growth rate in July, but still less than the expected 5% increase. Still, the result continued a reasonable first half of the year, showing that initial tariffs by the Americans did not have a significant immediate impact on their industrial activity. But today's big news will be from the RBA and their upcoming rate review. Analysts expect no change at 3.6%. Financial markets are of the same view, with nothing priced in to secondary market wholesale rates. But the RBA will be weighing the impact of relatively strong labour markets, good economic growth, low budget deficits, and a strong fiscal impulse, along with a rising CPI inflation touching 3% in August. Waiting could leave them with a harder-to-control inflation problem, although to be fair, no one expects a rise today, even if many think it would be warranted and wise. The US Treasury 10-year yield is now at 4.14%, down 5 basis points from yesterday, and the price of gold will start today at $3,830 an ounce, up $72 from yesterday and a new all-time high. Silver had yet another big spurt, now at almost $47 an ounce. This latest surge puts the US gold stockpile at Fort Knox and the New York Fed, now worth more than $1 trillion. American oil prices are down a sharpish $2 at just over $63 a barrel, while the international Brent price is now just over $67.50 a barrel. With global demand wavering, the planned OPEC increase, plus the resumption of Iraqi oil from their Kurdistan region, has traders talking about a glut. And the Kiwi dollar is now just over 57.8 US cents and up 10 basis points from yesterday. Against the Aussie, however, we're down 25 basis points at 87.9 Australian cents, and that's its lowest in 3 years. Against the euro, we're little changed at 49.3 euro cents. That all means our trade-weighted index starts today at just on 65.1 and down 10 basis points. And the Bitcoin price starts today at $113,795 and up 3.2% from yesterday. Volatility over the past 24 hours has been modest, though, at just under plus or minus 1.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.